Tom, I want to mark a milestone because it is now a big anniversary day for Fundstrat.
It is indeed. It's our 11th year since we started Fundstrat, which was September 15th, 2014.
Blink of an eye.
It's a blink of an eye, yes, because this is still mid-cycle for the bull market as well.
All right, so since you said mid-cycle for the bull market, let's get right into the record highs that we are seeing. If it's mid-cycle, that kind of implies maybe third, fourth inning, maybe fifth at the latest. Is that how you see things for this rally?
Yeah, I mean, I think some parts are later cycle, like part of the Mag 7 trade. But I do think AI still has many years to just propel earnings surprise and innovation and economic growth. So I don't think it's late, like it's too late. It's not too late to buy the Mag 7. But I think the next leg of this is really the Fed cutting, helps the ISM get back above 50, brings down mortgage rates, so it's a cyclical broadening trade. And then I think, financials I think are still important because I think that they're going to re-rate more like technology stocks. Goldman and JP Morgan are basically technology companies now. And as they embrace the blockchain, they're going to become more streamlined and less employee dependent, much more AI driven. So I think there's a lot to look forward to.
Now, if that is the case, you mentioned that it's because of a possible rate move lower and a trajectory of lower interest rates. Just how critical will it be to this market to have those lower interest rates? And do you think that there is a post-Fed playbook for what those companies are going to be?
Yes, I think it's really important for CEOs to be confident the Fed is cutting because we know the labor market has slowed, maybe even wobbling. And that's because businesses are cautious, and the ISM reflects it. It's been 31 months below 50. The Fed can actually re-inject confidence by saying we're back into an easing cycle. That helps businesses get confident and expand again. So there's a lot of legs to this if the Fed cuts, and I think it'll be a real improvement in liquidity.
You alluded to some of the places that could see the biggest impact.
Yes.
But can you take us through those? If you had to put a top three together about where you think the most activity or juice could come from if the Fed were to embark on this path. I think of maybe home builders. I think of other parts of the market, maybe technology based on valuations. But in your mind, what are the places that are going to reap the most benefit from that?
Yeah, so I'm looking at September 98 and September 2024 as the playbook, because those are both years where the Fed was on extended pause and they cut in September. The number one trade is NASDAQ 100. So I think that's why the Mag 7 and the AI trade gets a lot of lift off. The second is monetary liquidity sensitivity, global central banks easing. That's Bitcoin and Ethereum, and seasonally strong. I think they could make a monster move in the next 3 months, like huge. And the third, of course, is interest rate sensitives. That's really small caps and financials, but really the first two might be the standout trades.
All right. Because you mentioned the crypto side of things, you're actively involved now. It's not just a thing that you're doing on the side. You are very much engaged in the business of crypto. You govern, you oversee crypto assets now. If we were to say Ethereum, Bitcoin, we try to bucket them into risk-averse assets or risk-on type assets.
Yeah.
Is it fair to look at them that way? We used to compare them correlation-wise to the NASDAQ 100. Is that the fair assessment for how these things trade in the coming months?
Yes. Bitcoin is particularly monetary policy liquidity sensitive. Ethereum has elements of being sensitive to liquidity, but it's also part of this AI moving onto the blockchain and Wall Street moving onto the blockchain and that whole stablecoin ChatGPT moment for crypto. So Ethereum, I think, trades almost like 1971 Wall Street, which was the dollar went off the gold standard, a lot of innovation. Ethereum essentially is a growth protocol, and that's why Bitmine is so aggressively acquiring Ethereum.
What industries are going to see the most immediate impacts of the benefits of being on a blockchain like Ethereum, for example?
Oh, well, there's enormous benefits. Well, number one, stablecoins have proven that moving money is really good for consumers. Stablecoins are a way for unbanked people to actually have banking access. And merchants like it because they don't suffer from chargebacks. And we've seen it at BitMine because we are moving money onto the blockchain, right? We receive fiat money, we put it on the blockchain and buy Ethereum. It moves with a lot less friction. So Wall Street is building on the blockchain because they can rebuild a lot of their infrastructure on a public chain, really improves trust, and there's a lot of resilience and censorship resistance. Banks' biggest cost is labor. That's something they can save by moving onto the blockchain.
We've talked in the past about tokenization of markets, specifically the stock market. Is that something that is perhaps better indicated for certain types of blockchains versus others?
Yeah, there is already a lot of effort to tokenize. Robinhood is leading that effort for retail investors, tokenizing stocks, which allows you to trade it 24/7, which is a benefit, and with a lot of transparency. They're building these on Ethereum or a layer 2 of Ethereum. So Ethereum, which is the second largest blockchain after Bitcoin, is where Wall Street is choosing to build these tokenized securities.
All right. Tom Lee, with all things Fed, rates, stocks, AI, and of course crypto as well. Thank you very much. We'll see you soon.
And I just want to thank CNBC. They've been a great partner and helped a lot of investors.
Congratulations on your 11th year anniversary at Fundstrat, Tom Lee.
Thanks.
All right, up next on the show.